Scott Gecas joins us. He's with Walsh Trading there in Chicago. So a general weaker tone in corn and soybeans. Why? Is it harvest pressure or what?
There's a lot of different things going back and forth. So we have the trade war talks. They're saying that they're getting close to the phase one. However, China also came back and said they want tariff rollbacks to complete phase one. So you're seeing back and forth rhetoric as we've seen all year long with the trade war talks going back and forth. So we have yet to see anything definitive coming off of that. The main focus, though, moving forward this week especially, is going to be Friday's USDA report. And now private surveys are literally all over the place, from higher yields to lower yields to harvested acreage. So we have to wait and see how that's going to go. We don't see too much option positioning right off the bat today moving into Friday. The one thing that did spark my attention and really is very important when you're looking at the options is when you're looking at soybeans. I was on Monday talking about the option skew going to the upside calls. It was about a $3 skew to the upside calls. Now, today, it's only about a 50-cent skew. So that's a big difference. And it's not just because we had a little bit of a pullback on the bean market. So that's something definitely to take notice. So what that tells me is the volatility is declining. The market is not really pricing any type of big surprise. But if you look at the corn market, the call skew is still a little bit elevated, but there's rumors that we're going to have lower yields and lower acreage. That would pretty much shock the market. So we have yet to see what those are going to come out. But again, those are all rumors, and it's just swirling back and forth, so no one really knows.
All right, stay put. We'll come back and we'll take a look at our livestock trade as we head toward the closing bell. We're talking with Scott Gecas, and we'll have more after this. Scott Gecas rejoins us. He's with Walsh Trading in Chicago. So a little bit of weakness settling into the cattle market here, but the hogs going the other direction. How come?
Yeah, well, with the cattle market, I mean, it's very clear that it's very light volume. It's just, to me, that just shows it's a little bit of profit taking. So we still have strong cutouts, strong cash trade. I think some cash traded around 115. That's a significant jump. So that trend is still in an uptrend. We have a while to be able to break that trend to the downside. So on a technical basis, one could say it's a little bit overbought. But if we continue to have this stronger demand than normal, we expect those prices to continue up. And you got to stay with the trend. You don't want to fight the trend. Now, on the other side with the pork prices, it's just all about the trade war talks. Phase one is getting a little bit closer to a deal. Whether or not we get those China rollbacks on the tariffs, if we do, we expect that import campaign to pretty much continue and explode a little bit higher. The deferred contracts are holding a little bit dollar skew in the upside calls. So that definitely confirms that we're looking for that. Now, the one thing that does spark my attention with the pork trade is the production is expected to drop by about 240 million tons going into the first quarter. So we have short-term supply concerns, but going into the first quarter, we expect those supply concerns to be alleviated. And if that import campaign comes up, we expect prices to continue with that as well.
Wow, interesting stuff. Thank you, Scott, for spelling all that out. I appreciate it. Scott Gecas of Walsh Trading, and he is right there in Chicago at the edge of the trading floor.